So just again, only a couple of emails. I've got over 300 traders, and it's surprising how little I get sent. But anyway, here we've got the European ruble from a gentleman looking at this. It is can't really fault that what he's looking at. He's certainly got a horizontal level in there. A bit of a trend line support as well. Moving average. He's got the 50 and the 200 bouncing off the 50. We've got some good cyclicity going along both the trend line and now along the 50 EMA. There's some strength coming back into the euro. How long that will last, I don't know. But the ruble is obviously getting weaker and should do so. So that would push this up even further. So we've got higher highs, we're above the moving averages. Horizontal is soft, which he's recognised. That's good. RSI convergence, yep. Fib retracement of the 786. So just where's mine gone? Yeah, I've got these soft levels that he's recognised. This one is pretty soft because it's really only that high there. This one's a little harder, and this one being even, as you can see, that high there is the strong support. Nice round number of 47. But we're above that, and it's cycling along, so there would be soft support being this high and maybe that high there. But even with this support here, we can see resistance support, a bit of resistance as well. It's now getting weaker. You'd be looking to enter above that. So he had a target of $1.50, which would give it a risk reward of 1 to 1.7, he said. So there's 90 odd pips, and then you're looking at up to 150. So it's about 1.5 really. But it's looking reasonable as an entry, I'd say. We've got the convergence on the momentum. We're certainly getting got some room to move. Sorry, before we get back up to the overbought territory. So it's all pretty honky dory. The next one we're looking at is the CAD Swiss income generator to go long. That's good. LTF call entry. Stop loss is 155 pips. Target is 77. So you're risking $100 to make $70. That's not something that I'd really go for. You are aware that the target on these is purely the outer envelope, and with a 100 pip stop underneath that low, your risk reward's always going to be shithouse, to put it lightly. So whilst I do like this, it's in terms of trading it, I think this 100 for a 77 is just is not worth it. I was looking at the CAD Swiss, the Euro CAD yesterday for an entry, and which is the opposite to this on the 4-hour time frame. Unfortunately, didn't place. I placed the order, but it didn't trigger in. And I'll show you what I mean. In fact, I'll go to this because it's a bit quicker. It didn't trigger in, but I was looking at it on the 4-hour, trading this down. But she rallied up, and so I cancelled the order, and then it comes back down again. Always fun and games. But whether you're trading this or the CAD Swiss, I do like it. The trend is certainly towards the top side, heading back up now, as we can see, and but my only concern is why use or run that risk reward ratio that you're doing. it does give you target 8611, which you put in, but that's just this outer envelope. I think there potentially could be more in it. So otherwise, looking at it in terms of not entitled. Rubbish. Okay. E-signal's crap. I get rid of e-signal because it's just a waste of time during these webinars. So looking at this, we need to see if there is reasonable support for the trade. There's a bit of support there, minor support off these lows, but that's not even support. But you've got a bit of support here, these lows, these highs. So markets come back underneath that. It hasn't quite got back to this level, but we're certainly in an uptrend. Even if you went from there to there, you'd be not quite getting anything. So if you look at it, that's the start of the run. You got the 382. It's okay to come off the 382, but I don't think that there's, with momentum already up here, there's much of that in there. So perhaps, having a target of that outer envelope is okay. But if that's the case, then you'd want to be having a smaller stop. So having a stop of around 50 pips or 40 pips and targeting 77 pips. Because the likelihood of it getting sort of too far is reduced when you've got the momentum coming off. That makes sense? Audio problems. Audio problems should be fine now, I would have thought. I've cancelled or closed down e-signal. I think it takes up a lot of bandwidth, so the audio should be fine now, I would have thought. Let me know if it's not. Alright, so still on this CAD Swiss, we're looking at someone who wants to look at the 4 hour, which is what I was looking at on the Euro CAD. So, done the analysis on the daily. Got this bit of a channel going on here, and it's certainly got to the top end of that channel. Has come back down, and this grey one looks to be like a 10 or something. A 10 EMA. I'm not sure what that EMA is. I think it's a 10, mate. Are you back? And then the 4 hour, looking at this, and this is pretty much what I was talking about in terms of the CAD Swiss is that income generator. Is it's okay to target that sort of 86 area, and as you can see here, we've done, the gentleman's done measured this phase 2 to see where the next that has a target, which is great. He's got this divergence, a hidden divergence here, bouncing off the 50, got close to this support, and I know in the next bar it would have. Did you trade this, mate? I know you're online. The grey is the 50 on the 4 hour. Okay. Did you get in on this? Because it would have been, if you had your stop too close to that, you would have probably got taken out. But if you had your stop underneath this high here, in that area. I know that increases your pip risk. You got in the trade and still in it. Good. Um, so coming back to your analysis on the 4 hour, you've done this and you've got it bouncing off the 618, which is great, and the 50 EMA, and that's your target, and you're waiting just on that and waiting for it. So you've done the daily analysis, and that's good. And then you're looking at the 4 hour. Fabulous. You can't really fault that. So conservative target. Conservative target. Where's your target? 85.80. And this previous high. Okay. Did it get to that? I don't think it did. Not quite. With these two bars here, your stop should be at break even. So there's risk off the table. And maybe even now looking at sort of locking in some profit with this reversal bar, or trailing your stop up tighter. So that's good. Unfortunately, I didn't get triggered into the Euro CAD, and when I was in the upside down version of this, saw this, I cancelled the trade. More fool me. Alright, so Euro dollar looks like it's now forming a ring low off strong support and long-term trend line, as well as a 4 fib. Well, also showing bullish divergence now, so I was wondering what you think the likely move be. There is this, I noticed this trend line here as well, that there is a bit of a support zone here. 28 is probably stronger. Also, FXCM. Let's just bring up the Euro. Yeah, I've got these zones here. This is the bigger, the 2750 is the bigger one. This to me is a minor, it's really only that one there. If we look at the monthly, yeah, the top one and the bottom one are the stronger ones. This long-term trend line, it's almost getting to that too. So the one that has bounced off is the weaker of those. Right. So where do I think it's going from here? It needs to retrace some of this and get rid of all of this. So I expect it to be sort of maybe these lows or even these lows here, 30, into the 33s. Ultimately, I agree with a lot of the pundits who are now calling this down to 120. I certainly think it'll be testing these levels over the next couple of months, and so you want to be keeping a short bias on it, and looking for shorter opportunities. This is a phase 2 trade against the momentum and against the sentiment, and I think that's pretty tricky, but generally that's where it's I'd be looking for it to go. So your weekly analysis, yeah, similar trend lines, similar support lines. And some divergence there of the 4.3236. Interesting fib. On this one, it's not something I'd like to trade on the daily time frame. I'd be looking at it on the shorter time frames, trying to get. You don't want to be against this trend for too long. So this is the stronger support line that we identified. It's now acting as resistance. So I'd be in it for an hourly, maybe fading it against that short, or waiting for it to break through and retest that, and then if it comes up and above that and retest it, then sort of targeting this area. So getting in, let's call it say 120. You've got about a 130 pip run back up here, but I'll be looking at to do that on the hourly. So I'm not in it I've got a shorter stop, and I'm not in it for too long. I think the daily, there's a lot of momentum, and I wouldn't want to be against that momentum for too long, if that makes sense. This is the top one. We can see there on the monthly. These highs here, highs here. Certainly a zone, but that's it. We can see how the market's reacting to that 2960 level. Euro CAD short 1 hour in the next few hours. Possible ring higher forming. I also missed a 4 hour entry last night, but had it set up. Right, good stuff. Euro CAD 1 hour. Yeah, maybe there's maybe we could get something like that. If we do get this retracement here, what is happening is the cyclicity is failing then, because this low, it hasn't made a lower low. So in that sense, the 4 hour cyclicity failing to produce lower lows would also mean that maybe this phase two is going to happen. The concern I've got is that low, that high, but you'd kind of be sort of aiming for that area there. It's a little harder to see. The reason why I like this as a short is because it was coming back to test this and was moving away from it. But now that it hasn't really carried on with it, I wouldn't be looking to short it on the 4 hour. And I think shorting it on the hourly, I'd be looking for maybe 20-30 pips on it. Nothing on a short basis, but it's highly unlikely. I think it's a reduced possibility because of the cyclicity failing. It would be more inclined to, I'd be thinking that it may come back up and test this level here. So if it does set up on the hourly, that'd be my concern, is that the cyclicity is failing on the longer time frame. Okay. Divergence showing, yeah, clear divergence on the Euro CAD, if that's what you're talking about. On the 4 hour, it's convergence. So we're now final email, which doesn't have any attachment to it. Come on, wake up. Is a market that is awash with phase one extensions and not a lot of divergence, so there's no new trades. Watching Aussie Kiwi long to bounce off the 20 EMA, need buyers. Well, there you go. You have buyers. If we put the 20 EMA on there, you've got that bounce off the 20 EMA as you wanted. Not quite back above the support line. There's support and resistance there. There's the other support is around 109. Oh, sorry, $1.10 there. So 112 is in here somewhere. It's not back above that. So there's no real support unless you're looking at maybe these lows that it's coming off. It's a weaker entry, but it's certainly something worth looking at. But it is a weaker one coming off a very soft support line, and the 20 EMA is not as strong as coming off a strong support line for obvious reasons, and or the 50 EMA. So I wouldn't be putting 1% on this, but I'd certainly be looking at it. In terms of Fibonacci, let's come back to the 50 as well. Okay. Looking at the Aussie Kiwi, it is showing reversal divergence with the ring low and the RSI is at the bottom range. Let's just check on that. RSI is down in the 50s. Do you think I should wait to see if it pulls back further to the EMA before entering, however? It seems to be a trend reversal, but on the weekly hasn't yet completed the cycle above. Trend reversal. Certainly this was a pullback of phase 2, and there's potential that it's over, and it's, as I just walked through, it's worth having a look at in terms of going long. You know, we all know about this monthly one by now, bouncing off 105. And you know, looking at around the 120 mark as a potential target, you know, sort of in here area, and maybe even a little higher to sort of the 123 area. Weekly, you know, that's just a reversal bar on the weekly. Certainly nothing to be concerned about. And the daily, as I said, I don't see divergence, reversal divergence. There's this class C reversal divergence, you know, where we've got the RSI going sideways over the 4 periods, over these, you know, 4 bars. And that is potential divergence, but that might have just signalled this turnaround, and now the market's heading higher. Aussie obviously broke through 92. I'm looking to get short Aussie when it comes back and tests this. You know, it's only 40 pips away. I don't expect it to be rallying from here. Now that it's broken the back of this, out of this range, you know, you're kind of looking at it to be heading back down to this area here around 88, 89, if not sort of 85 area. And I'll be looking to get short on the back of that. Wasn't prepared to short it here because of I wanted to see it outside of the range before I decided to make that decision. And you know what, there's even potential that we could get down into 80 cents area on the Aussie, with the Fed looking at raising rates, and our economy sort of stumbling and stagnant. You know, you might see Glenn Stevens lower rates, and you know, we'll have we'll be down at sort of sub 2% interest, whilst the US is raising rates, so funds will flow dramatically out of Aussie and into the US, and that could potentially push us down to 80 cents. We haven't been down there for some time, back in 2010, but there's no reason why we shouldn't be back down there, I don't think. And as to the Kiwi, well, you know, it's still falling, probably getting towards the end of its fall, but you could expect a bit of a bounce in this, and if that's the case, well then, when that does happen, then you might see this come back down and test 110. So again, on this, I do think this is going to 120, but I think the Kiwi is probably going to fall down to you know, 70, 75, 77 cents, whilst we go and test 80, 88, 85. So in that case, you know, we're looking at $1.10, between $1.10 and $1.20. I wouldn't want to be in this for too long, going long, with the Aussie falling. And so I'd be looking at trading this on the shorter time frame. You know, yeah, getting some cyclicity in the 1 hour above the EMA and trading it that way, rather than trying to take on the daily. Could be wrong, you know, the Kiwi could continue to shit itself, but there is a bit of support here, and it is overdone, so I'll be expecting some sort of bounce. This will be a trade then for tomorrow, Aussie Kiwi. As I said, coming off a weak support line and only the 20 EMA, I wouldn't be necessarily looking at putting 1% on this, but there's certainly a potential trade fitting the rules somewhat with a 100 pip stop. You know, what's the likelihood of getting 200 pips out of it? I think pretty difficult. So I prefer to look at this in a shorter time frame. Maybe later this afternoon or tomorrow morning we'll get some cyclicity in this and be able to trade that on the shorter time frame. So you'll be waiting for tomorrow anyway, whether trading at the daily or the shorter time frame. In which case the Aussie will also fail to push up. If the yeah, I think I've pretty much covered the Aussie Kiwi. Yeah. Got any more questions about it? I'm happy to answer them. Before I go to the final email, which talks about the knock, where he's moved his stop loss because of the high test. When did he send this? This came in Wednesday. What's today? Thursday. So this came in yesterday morning. Saw this high test, so he's moved his stop up and took off another third of the trade. And now he's going to move behind swing lows, as I think this is a long way to run before it stops. Well, I think if your stop's underneath this, you'll probably get taken out shortly. You'd expect some sort of pullback in the cyclicity. You've had a good trade, so that, yeah, I'd be leaving my stop underneath that. Well done. Okay, guys. Are we happy with everything this week? Not on tomorrow. Sorry, there's no webinar tomorrow, and there'll be one on Monday. What's on the calendar? We've got Aussie unemployment in a couple of hours, so something need to be aware of. This Muppet, you certainly will need to be aware of. Federal budget. I'm surprised that's yellow. And also this guy maybe could see the yen. It's certainly having a great run at the moment in terms of its weakness. It just hasn't stopped. Broke through this level and hasn't decided to. It's decided to keep going. So I think there might be some. He may announce that they've been active in the intervention, which the Bank of Japan does on a regular basis. Because the price action would suggest, and the momentum would suggest, that this is a fundamental move, not a technical move. So he's talking tomorrow, so there might be something to be aware of. Looking at the pound Swiss, phase 1 continuation long. Okay. Where are you, pound Swiss? Phase 1 continuation long. Because it's bounced off the 200. Look, I don't like trading over extended bars, and I certainly engulfing bars. It's a little, for me, that's a little tough to see, and you certainly means your stop's going to be huge. If you're saying that, you know, you'd have to say, well, we're cycling above the, or from the 200. Rather than from the 50, or you'd be looking at saying, I don't know if there's a trend line there. I can't see a trend line, but certainly there's a potential horizontal level. horizontal level there. And it's got back above that. It's just a little too messy for me to warrant wanting to look at that. Um, yeah, I'm sure there'd be some people saying, well, it's actually in a channel. Um, with that being the upside and this being the downside, and it's tagged the bottom of that, and so therefore you should be looking to short it. And fundamentally, I read an article this morning that said buy anything that's in the pound, because the chances of it continuing to, it's priced in the fact that the Scotland will win, will be independent, but the risk, there's little risk, so therefore there's little risk for if you buy it for it continuing to fall. But the upside is that if they don't go through, the vote says no and they want to stay a part of the United Kingdom, or part of Britain, England, or whatever the hell you call it, then the upside is that there'll be a big bounce in the UK, in the FTSE, which is their stock market, and also the pound. I thought that's a fair call. But that would be just a fundamental trade, not a, or more of a probably a speculation rather than a technical setup. Some of the Euro crosses seem to be setting up for phase one. Okay. Let's have a quick look. Euro ruble, which we've already covered. Certainly looking at Euro Sing. No, that's phase two. Euro Rand, phase one short potentially. The Rand had a very nasty figure earlier in the week. Economically, they're pretty shit house, just as much as Europe, and that's why this rallied. So, yeah, but certainly getting the cyclicity there. There may be a new phase one short on that one. Euro Lira, yeah, cyclicity or range bound and still in it. Hard to tell. Yeah, getting slightly lower lows each time. Also a potential phase one short, yep. Euro Sec, going nowhere fast. This is Zloty, also going nowhere fast. Euro NOK. That one again would be hard to say. Are we in a range, or you're in a trend? And there's a cycle underneath it. There's some momentum up here. You could potentially be looking at that. You need to see some selling action in there. But my concern with that would be this obviously large support level. Euro Kiwi, messy. Very messy. I don't like that. Needed to see that lower here in this move. It had plenty of time to make up its mind and make it lower. You know, yeah, don't like that. Euro Yen, look, it's been a bit of a range and it's getting sort of breaking out of that range here, or it's on the top of it. And again, there's there's support here. Look at your moving averages. I like this because the yen's getting weaker. I'd like to take it long, but technically there's no setup there for a long. Euro pound, similar to the pound Swiss, is shorter time frame. Okay, go for it. Longer time frame, no interest. Euro Swiss, nice move. You're not going to be shorting this, no way. And on my books, will you be shorting this? Okay. Euro CAD, Well, that's phase 2, isn't it? We've got this clear divergence. I'd like to take it short, as we've discussed this one before on the shorter time frames. There is a bit of concern here of this support resistance, but I'd like to be short this and have called being short this for many months, and I think that that should continue. Euro Aussie, this one and the Aussie Swiss I do see as a potential phase 1 if we get some more selling. Aussie Swiss looks a little better than this one, and Euro is obviously nowhere near phase 1, but potential phase 2 trade if you like trading phase 2. Aussie Swiss I think was slightly better in terms of its setup. You've got this sort of zone here of support and resistance, and it's bounced off that. Momentum, certainly we've got plenty of room to run this again. There's a bit of resistance up here, so I wouldn't necessarily be, in terms of risk reward, it's a bit dicey. 90 pips for 150, it's 1 to 1, sorry, 1.5, and so that's something I'd be looking at on the 4 hour or 1 hour. Yeah. So that's about it, guys. A lot of phase 2 trading setting up. Yep. And if phase 2 trading is your thing, then I might lay that one there. Then by all means have a look at it. Personally, I'm staying away from phase 2 for the moment. But I'd like to get short the Aussie at some point. Yeah. Okay. You guys got anything else? Otherwise, I shall see you on Monday. No. Thanks, guys. Have a great weekend, and yeah, enjoy the finals footy. Cheers, guys.